So last week we finally got our bounce that we have been waiting for in the markets for a very long time. Granted, we were still negative on the week, so we have had a very historical 6 down weeks for the Dow Jones, S&P, NASDAQ, and the Russell 2000, meaning we have not had 1 week in the last month and a half that the stock market has returned a positive return. Now, we need to talk about exactly what to expect for this week for AMC stock, for the broad markets, because guys, this ship is gonna sail, and it's gonna sail into the fucking beautiful sunrise, or it's gonna go down possibly faster than, famous shipwrecks, right? Titanic, the like. So we need to talk about exactly kind of what I expect, go over a price target, price prediction for AMC stock, and that's that. I hope you guys find some value out of this video. If not, make yourself some money. And I do have some options on AMC, which I will talk about in this video. So getting straight into it, first thing you guys need to know is why we bounced on Friday. Obviously, it comes down to what Fed Jerome Powell said. He essentially capitulated. He said, yeah, essentially we were wrong, that we're probably not going to get a soft landing, which I think the market should have already figured that out by the press conference we had from the Fed what is that, 2 weeks ago now, where Fed Jerome Powell was asked about basically a recession. He was saying, hey, there's very low likelihoods of seeing a recession this year. Talked about the negative GDP print, but when he was talking about the longer term horizon, about potentially what the economy might do, he said, well, we think there's a really good chance of a soft or a soft-ish landing. And the markets, as you guys know, rallied about 3% in 2 hours after the Fed conference. It was seen as very, very bullish. The markets just absolutely rallied. Next day, the markets had lost all of that rally, plus some, with the NASDAQ down almost 6% to close out the day. And it has been basically downhill ever since then until Friday. Now, the Fed capitulated, but what they said was not exactly good. It was just, hey, we're now on the same terms with the market. So there's not really a disconnect between what the Fed is saying and what the markets are pricing in. When the NASDAQ is down 30% in 5 months, you have to take notice of that. And if you're still trying to deny the inevitable, right, growth slowing down, just the economy slowing down in general, you're going to have a problem there. And the markets, they're not going to know where to really price things. But all things said and done, it was not good what the Fed said. Talking about a recession, it was not good. So we will see exactly how the markets do interpret this bounce. If we can see legs to this rally, that is obviously going to be a very good thing for stocks like AMC, for a lot of the stocks in our portfolios that have gotten absolutely beaten into the ground. Now, I will say, we really don't have much for economic data. There's virtually nothing to move the market in a big way. You do have retail sales, which does come out on Tuesday at 7:30 in the morning. Retail sales month over month for April. That could be pretty important because it's obviously a sign in the economy. And it's kind of weird how the markets are thinking at this point. If retail sales are really good, well, the markets might say, well, the Fed's going to have to raise more aggressively. Demand is not being destructed fast enough. Or if retail sales are bad, the markets might still say, hey, the Fed's going to have to continue to raise rates to get down inflation and the economy's slowing down. So it's kind of like a lose-lose at this point with a lot of certain data points until we get CPI coming down more than expectations, which the last CPI report, economists were way off yet again, so I think they're going to have more conservative estimates, which might be easier to beat coming next month. I believe that CPI data should come out about June 11th, give or take. So you have that. You don't really have anything else besides some real estate data. You have housing starts APR, building permits APR, which that could be important for real estate stocks, but they don't move the markets. Existing home sales APR, and that's pretty much it for this week. We'll see how the bond auctions come in, so on and so forth. That's going to be very, very important because the 10-year Treasury bond actually did take a little bit of a breather last week, and that's why we did see a little bit of a rally, right? Bond yields were over 3%. Now they're sitting at 2.92%. Bond market is actually open, and it's been making a lot of very, very weird moves. You can see bond rates are ticking back up after they did fall from almost 3% down to 2.81% on Friday. So this is going to be very important depending how fast or if we can come down or chill out at all in the 10-year bond rates. That's what could potentially fuel a rally, because the 10-year bond rates, bond yields, whatever you want to call them, it's competing assets for money. So I've made this analogy before. I'm sure, you guys have probably heard this, but if you have not, it's the best way to look at it. If would I lend you money for 3%, or 4 or 5%, or would I lend the government money for guaranteed 3%? I'm gonna lend the government money for 3%, or I'm gonna charge you like 6, 7, 8, 9, 10%, depending on your credit worthiness, right? So when this rate does inevitably go back down, let's say 2.5, well, now you can't get the same attractive rate from the government, right? So then you can start to say, hey, well, now I'll give you money for 4%, right? So it makes or kind of spurs more economic activity the lower this rate is, and that's why it is seen as a positive thing for the markets, and that's really a big reason why we did bounce there on Friday. But nothing too crazy for economic data, like I said. Now, as far as AMC stock, we can see that we have about 11,000 calls that are in the money, 203,626 calls that are out of the money. That could mean a substantial gamma squeeze if we do get a continued bounce and if the markets can actually find solid footing. I will say, before we get into all of the data around AMC stock that you guys need to know, it was looking real shaky at one point on Friday, and then we actually rallied into the close. So that right there was kind of my sign that, hey, this could be a tradable bottom here. We could have more price pressure to the upside. Maybe, just maybe, since people are buying and holding over the weekend, it could be a very good thing. We have not really got any headlines that are like too, overwhelmingly negative. You are seeing Finland is applying to join NATO, and Russia has said that they're obviously going to retaliate for that. So we'll see. That could become more of a negative headline if that does start to come about. Also, you have China that is claiming to start to slow down or stop their lockdowns here in the next coming weeks, and that will also be another very, very bullish catalyst for the markets. But ultimately, CPI and the Fed are what is going to dictate the markets, because they dictate the 10-year Treasury yield. And when this thing can actually start to come down a little bit after its parabolic rally, that's when I think we could see a really sustainable bottom, and that's where we could continue to march higher. But I think overall there's going to be a lot of back and forth. So when we're talking about AMC stock, we do have a lot of call activity, potentially could add a lot of buying power to the stock. You also have a lot of puts on the stock, and that is contributing to a lot of the short interest that is not really being accounted for in the Ortex data, because when the market makers go out and short stock, it's not reported on Ortex. It's not reported in the same way, because you could have, for an example, if the stock dropped 5% in the beginning of trading, market makers had to go out and short a bunch of stock. Well, what if the stock ends 10% higher? Well, the market makers shorted all those stocks, all those shares for those puts that pushed the stock price down in the beginning of the day, and then by the end of the day, the market makers were actually buying shares to de-hedge those put positions. So it doesn't come up the same way, but it's still a very formidable force of buying power that is on the option chain at any given moment, and that's why you're seeing a lot of explosive moves in stocks like AMC and SoFi and DraftKings and Fubo and a lot of key stocks. So I think that's very important to recognize. As well as that, like I just said, you have about 97,000 puts that are in the money, 48,000 puts that are out of the money. So potentially 9.7 million shares that would have to be hedged for on the, or de-hedged for on the put side, and potentially 20 million shares on the call side, even if half the calls went into the money. If we did see a big rally, keep in mind these calls are going to be closer to the money now, maybe like the 15, the 20, 25, $30 strikes instead of like the 140s. The old contracts, people are not really purchasing those in the same way that they were. So 10 million, 9 million, it could be really, really good. And we are seeing a lot of option activity for July, September, May, and June coming in from the hedge funds. Pretty substantial orders. Some of these over $100,000 a piece. You're seeing $10 calls, $15 calls, $12 calls, more 15s, 11.50 50s, seeing some puts, but by and large, a lot of call activity. More specifically, 21 orders totaling $1.78 million, positive order value of 96% there on Friday. So definitely a positive thing in my personal opinion. Now, the short interest of free float, even though we continue to rally in AMC stock, I believe this is 2 green days in a row now. Let's see, because that'll be crazy. Yeah, 8% from the bottom at $9.70 per share, and then 5.45% on Friday. So all in all, we've had a pretty good last 2 days, and you're not seeing shorts actually covering. I think a lot of this activity that is moving the stock around a lot to the upside, to the downside, is really based off of the option activity. I don't think any of this really has to do with shorts going out and covering. Like, I've seen people talk about that, and I simply don't think it's the case until we see some inflection point, some kind of data supporting that. I think there's just a lot of option activity going on in a lot of stocks right now. That's just honest truth. This does go for a lot of other stocks as well. It's not just an AMC thing. There's a lot of option activity going on out there. Now, the short interest of free float is 21.66%. Current shares that are sold short of 111.65 million. Cost bar max of 6.56%. The utilization of 100%, and the days cover is sitting at 3.12. So the data here is also looking very, very good, and just straight up primed for a short squeeze. Liquidity levels are there. We're essentially, restricting liquidity as we currently speak. So any kind of catalyst here, whether it's small or big, could be very, very substantial. Now, before we get into the price prediction and what way the markets could go and what levels to watch for, I want to point out the crypto markets as well. They are quite dramatically higher over this weekend. You could see over the past 24 hours, Ethereum up 2.5%, BNB up 4.33%, Cardano up 7.37%, Solana up 12.68%, Avalanche up 11%, go so on and so forth. You could go down the list. Very few cryptos have actually been down over the last 24 hours. The Terra coin is oh my gosh, that's terrible. But I do want to point out, if Tether or another stable coin does go under and you see some of that rug pull like action we've seen with Terra Luna, then that could be a black swan for the markets. And if that happens, basically at any time, like if you're up at night and you're seeing crypto is just getting destroyed, then that will weigh on the markets. Do not underestimate that whatsoever. Now, that is pretty much it. Let's go ahead and take a look at the chart. Obviously, key levels to watch for is $10 to the downside. We went under $10 briefly, I believe, this day right here. Hit about $9.95 per share, closed above $10, and then came down here and hit $9.70, and then obviously closed well above $10 at $11.20 per share. Another green day as of Friday. So you want to watch $10 per share. That looks like a very solid level of support. If we do get a bullish reaction this week and the markets can find some bit of good news or just any reason to hold up this rally and not short the rally back into the ground, then you definitely want to watch that $15 level. I think that's going to be very, very important. That was our support level for a very long time. A very, very long time. So if we can get back above that, I think it'll again turn into another big support level, and that would really be my prediction to the upside. I think in between 15 and 1738 would really be the levels that I would be watching for in this little gap right here in between our 50-day moving average and that resistance slash support level, depending how it turns out, at $15 per share. And then to the downside, if we break under $10 per share, you guys got to realize the markets are going to be in a very, very bad place, but I simply don't see that happening given the rally that we've seen, the close that we've seen on Friday. I think it's way less likely that we do see another just terrible week in the markets, considering we hit 385 on the SPY and then bounced right back up from there. It does look like a short-term bottom was set with that flush out. So $10 per share, that's what I'm going to stick to my worst case scenario. Best case scenario in between 15 and 17.38 per share, just given the support levels, resistance levels prior, very important levels, and considering what could happen, there's going to be a lot of momentum both directions. You're going to have big green days, big red days in my personal opinion, but I think we will trend to the upside. The MACD extremely oversold. The Bollinger Bands puts us, at about $15 per share, and usually stocks tend to revert back to the Bollinger Band, the middle blue line, over time. So that would put us at about $15 per share. So a couple of reasonings to why I believe it's going to be bullish. Let me know your comments, questions, or concerns down below in the comment section. If you guys want to come trade with me live in real time, link down below in the pinned comment to do so for that one. Get yourself those free stocks down below in the description with Webull, Moomoo, and Public. Varying different ranges of free stocks with Webull, Moomoo, and Public. I believe Public gives you 1 free share valued all the way up to $300. Webull will give you 10 free shares when you sign up and deposit $100. Moomoo will also give you about 5 free stocks if you sign up and deposit $100. So it's a good time to get some free stock, good time to buy the dip. It's a good time to be alive, baby. And thank you guys for tuning in. That is it. I'll be live tonight if you guys want to come chat and ask all of your questions, 10 p.m. to 11 p.m. Eastern Standard Time. But until then, you guys enjoy your day. I will see you in the next one.